Hello, everyone. This is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Monday, August 17th, 2026. Economic releases last week, pretty favorable. In total, what really drove it were the inflation numbers. We'll go through that. Last Tuesday, we had existing home sales released, and it was very much in line, 4.06 million. Then on Wednesday started the inflation discussion and data points. We had CPI, both core and headline number, and both were exactly as expected. So the headline CPI number for July was up 0.1% month over month, exactly as expected, and year over year, exactly as expected as well, up 3.4%. Core inflation month over month was up 0.2%. Exactly as expected, and year over year was up 2.5%, exactly as expected. The next day we had PPI, Producer Price Index, very much the same picture here. PPI month over month for the month of July was up 0.2%, exactly on consensus, and the month over month core was up 0.2%, exactly as expected. We had initial jobless claims also on Thursday, as we always do, and that came in higher than expected. Now, we've just pointed out over the last several months, the actual number kept defying the odds and coming in super low. But in this case, the expectation was we'd come in at 198,000. It came in at 209,000. Now, that's well below what the average was, excuse me, any trailing average 6 months ago. So it's still a good number, but did not hit consensus expectations. Lastly, in terms of consumer spending, so it kind of looks like first half of the year, good for consumer spending. July, a bit of a lull. Not sure why, we'll see. But retail sales month over month, the consensus was expected to be up 0.1% month over month, and it was actually down 0.6%. And then if you strip out autos, the expectation was it would be up 0.2% month over month for July. It was actually down 0.3%. So that's a bit negative, obviously, for GDP growth. But when you're really concerned about inflation, you're worried about what the Federal Reserve is going to do, modestly negative numbers like this actually can be favorable. So inflation expectations last week went up slightly. The 10-year break-even went up 2 basis points from 225 to 227. The Atlanta Federal Reserve, in terms of the second quarter estimate for GDP growth, third quarter GDP growth, we had mentioned that the expectations seemed really high a week ago, with the Federal Reserve, Atlanta Federal Reserve, believing we would have 5.8% growth. Came down already to 4.3% growth, which again seems awfully aggressive given all the other economic indicators we're seeing. We'll see. Fed funds. Well, we do have a FOMC meeting in the middle of September. The expectation is coming down in terms of the expectations of a hike. It was 44% just a week ago, came down to 33%. And then expectations through the rest of the year, through the December meeting, the expectations have been coming in. The expectation that the hikes expected are coming down. So the odds of no hikes or cuts is 34%. The odds of one hike is 45%. That's what it was a week ago. But what came down is 2 hikes had been 27%. Now the probability dropped to 19%. And 3 or more hikes was a probability of 5% a week ago, dropped to 2%. In terms of how the market reacted last week, equities, positive, decent week. S&P 500 up about 0.4%, Mag 7 down 1.1%. We'll just point out some year-to-date numbers here. The S&P 500 up 14.5%, but the equal-weighted S&P 500 actually up better, 17.2%. And leading everything here in the U.S. for the year-to-date is the Russell 2000 small caps, leading the way up 24.5%. In terms of international, developed markets ex-US, decent week as well, up 0.69%. So year to date, that index is up just about 15%, so very much in line with the US, with the S&P 500. Emerging markets, though, another fantastic week, up 2.66%, and now on a year-to-date basis, up 22.7%. Fixed income last week gave back a little from the prior week gains. The two-year yield was down 2 basis points. The 10-year was up. The Bloomberg U.S. Aggregate Bond Index was down 0.14% during last week. Now on a year-to-date basis, down about 25 basis points. So let's take a look at the economic activity that will be released this week, and this is really a yawner. Fantastic. On Tuesday, we've got a number of home sale metrics, building permits, housing starts, pending home sales, little give and take. There's not much to read in here. And again, the markets generally haven't reacted to these numbers in a long time, unless you own a home builder. So we'll just skip that. The initial jobless claims number coming out on Thursday, expectations now ratcheted up a little bit after last week's miss. So the consensus expectation is 210,000 new claims to be announced on Thursday versus the 209,000 that we saw just last week. So that's it, a brief one. We thank you very much for watching this recap, and we'll look forward to seeing you again next week. Thank you.